for starting your week with us. Hello and welcome to Business Daily. I'm Jeju in Seoul. We have plenty on our plate today, so let's get started with the day's highlights. As the Chinese economy goes through some major transitions to achieve slower yet more sustainable growth, how will these changes affect the Korean economy? We'll sit down with the World Bank's Vice President for East Asia and Pacific region. Korea can be quite a tough place to live for elderly people, with latest numbers showing that nearly 7 out of 10 senior citizens end up suffering from so-called multidimensional poverty. But first, flights grounded on the southern island of Jeju have been resumed shortly before 3 p.m. on this Monday, after being suspended for 44 hours due to heavy snow and strong winds over the weekend. Hundreds of flights from Jeju International Airport had been canceled since Saturday after the tourist island was pummeled by the largest amount of snowfall it saw in 3 decades. According to airline reservations, roughly 86,000 people were estimated to have been waiting to board their flights, but actual figures were likely lower, considering multiple bookings with different carriers. The Ministry of Land, Infrastructure and Transport said a total of 190 planes, 47 of which are temporary flights, have been deployed to help relieve the passenger backlog, but it will take over 2 days to transport all of the passengers off of the island. Korea has opened a center in downtown Seoul to support trade and investment with Iran as the country emerges from sanctions and international isolation. Officials from the Finance and Trade Ministries, Korea Exim Bank, and other related institutions gathered on Monday to open the center that aims to resolve problems companies or individuals face as they make investments or carry out trade with Iran. The Finance Ministry expects the center to make it easier for companies to get all-round information. Before, they had to call or visit separate institutions one at a time. Speaking at the opening ceremony, Vice Finance Minister Choi Sang-mok emphasized that the lifting of sanctions on Iran provides a great opportunity for the Korean economy. And for more on last week and this week's stock market action, we have economics reporter Choi Jin-seok from SBS CNBC joining us on the phone today. Hello, Jin-seok.
Thanks for having me, June.
All right, let's get started by looking at the Korean stock market. Tell us about Friday's close and its overall performance last week.
Right, the Kospi finished the week strong with gains above 2%. The index rose by 2.1% last Friday to close just shy of 1880. Foreign investors as well as retail investors were still net sellers, while institutional investors boosted the index by buying more than 340 billion Korean won on $280 million worth of stock. The Kosdaq surged by 0.7% to settle at 670. On a weekly basis, the Kospi rose by 3 basis points. Foreigners were still net sellers, selling shares for 35 consecutive sessions, marking the longest streak since the financial crisis. But institutional investors kept the index positive by buying more than 1 trillion Korean won, or nearly $840 billion worth of stock last week. 3 main indices of the U.S. market posted their first weekly gains of 2016 last week. This is thanks to signals from both the European Central Bank, or the ECB, and the Bank of Japan, or the BOJ, that they may implement further stimulus, as well as a rebound in oil prices of more than 9% last week. These positive catalysts also helped the Korean stock market post a weekly gain.
Then how did the Korean stock market close on the first day of this week?
There was still positive momentum in the country's stock market. The Kospi briefly rose above 1900, helped mostly by institutional investors who continued to buy shares. Most blue-chip stocks posted gains, and share prices of most steelmakers and construction companies rose as well. These are the sectors that have been hammered the most during global market jitters, and that's why they're also the first to react to improve sentiment throughout global equity markets. The Kosdaq rose more than 1% as well. Different from the Kospi market, foreigners were net buyers in the tech-weighted market.
And the U.S. Federal Reserve is expected to draw a lot of attention from global investors with its Federal Open Market Committee meeting this week.
That's right. January's FOMC meeting will be held between Tuesday and Wednesday local time. So for those in Korea, we'll have the results of the Fed's first policy meeting in 2016 by Thursday morning. Following signals from the ECB and the BOJ that they're ready to act further if the global economy remains unstable, expectations for a Fed delay on its rate hike schedule have been surging. After the Fed raised its benchmark interest rate for the first time in nearly a decade in December, uncertainties surrounding falling oil prices and China's economic slowdown have heightened. That's why market participants expect the Fed to join the ECB and the BOJ by signaling they will not act prematurely until market jitters are released.
Now, on the corporate front, many global companies are expected to report their quarterly earnings this week, right?
Exactly. Starting with McDonald's on Monday local time, Apple will follow on Tuesday, and on Wednesday we'll see companies like Microsoft, Amazon, and Alibaba release their earnings. A lot of the focus will be on Apple's earnings, of course. Share prices have recently fallen around 25% from their peak, reflecting low expectations. Big investment banks, including Morgan Stanley, Raymond James, and Credit Suisse, have lowered their outlook on Apple's iPhone sales for both last quarter and the upcoming March quarter. Earnings for big Korean companies such as Hyundai Motor, LG Electronics, and SK Hynix will come out tomorrow. Kia Motors, LG Display on Wednesday, and POSCO on Thursday. But expectations are low among these firms due to fierce global competition. This has been Choi Jin-seok from SBS CNBC.
China's latest growth figures have further prompted concerns over slowing global demand here in Korea, where exports are the country's traditional growth engine. And our Hwang Ji-hye sat down with the World Bank's Vice President for East Asia and Pacific region to talk about the changing global conditions that Korea faces.
After experiencing a rapid growth for more than a decade, now China is going through a painful slowdown recently, and this is coming from the government focusing more on domestic consumption over government investment. What's your take on the transition in China?
Well, this has been a transition that we anticipated, we have expected it. If you are growing 6.9%, and even the bank is expecting in this year about 6.7%, you are talking about a substantial increase of an economy. Think of the 6.9, that is about $700 billion, so that's quite substantive. I think we need to see in the transition phase which sectors are going to be more challenged, which are going to be growing. And what our advice has been is to focus on that.
Exports to China account for a quarter of Korea's total exports. How would this transition affect Korea?
Well, first of all, indeed, it is 25%. It's important. Let's also add that Korea has been very successful to have 75% elsewhere, including, for example, ASEAN, Japan, and the rest of the world. I would argue that the 25% is also an opportunity. First, you have a very strong presence in the Chinese market. Secondly, that transformation means also China will have a rapidly growing middle class. So what the interesting transition is, you will have some producers losing out, but there will be new demands in other goods. Electronics is going to be very important, but also all the technologies that are able to adjust quickly to new market trends. Korea has been successful over the last decades to adapt quickly to new trends. It's not about, unquote, predicting which is the next successful product, an iPhone or whatever. But I think what will be important is, does an economy and do firms have the capability of adjusting.
So what do you see in the next 5 to 10 years in terms of changes in the regional dynamics?
I think what is very important is that the center of economic gravity is increasingly moving to East Asia. There are major powers in the region, and Korea is, as also a very strong economic power, could be actually very good as an integrator. Also, Korea could make a major contribution given its own successful development trajectory. The relevant comparator for Korea is not comparing your growth performance with other developing countries. It is with more advanced countries. That is the league in which you are right now. And this year the aspirations are to be in the order of 3%. That would make Korea one of the fastest growing advanced economies in the world. And there, I think in relative terms, you have been doing well.
It's very interesting to hear that we are in the level of advanced economies. Thank you so much for your time today.
Thank you very much. Pleasure.
A new report shows that demand for hybrid vehicles here in Korea is on the rise again, touching a new record last year. According to Korea Automobile Manufacturers Association, nearly 39,000 hybrid cars were sold in 2015, marking an on-year rise of 7% and topping the previous record reached in 2012 by around 600 vehicles. Industry experts say this points to a growing environmental concern among Korean consumers, more noticeable considering oil prices have been consistently falling. Hyundai Motors sold the most hybrids last year at some 22,600 units, trailed by Toyota, which sold just over 9,000 in Korea. And this niche is expected to thrive. Earlier this month, Hyundai unveiled its first-generation Ioniq hybrid to directly rival the Toyota Prius, also scheduled for a new release around March along with Kia. Despite being one of the wealthiest countries in Asia, Korea has the highest elderly poverty rate in the OECD. Now, making matters worse, a new study shows that most old people struggling to make ends meet also suffer from so-called multidimensional poverty. Our Park Ji-won has the details.
Nearly 7 out of 10 Korean senior citizens end up suffering from multiple layers of poverty. According to a recent study of nearly 3,000 senior citizens surveyed, 67.3% of them, as of 2013, were defined as living below the poverty line in more than 2 criteria, such as income, housing, and health. More than half of the elderly citizens were considered poor in terms of income, earning less than half of the nation's median income. 5 out of 10 senior citizens also suffer from more than 2 chronic diseases, depression, or have difficulty with physical activities. Nearly half of the senior citizens also have poor social participation rate based on their regular group activities. However, compared to figures in 2011, the overall numbers have improved. Research fellow Hwang Nam-hee, who led the study, says the reasons behind the improvement are not yet clear and could be the topic of future studies. She emphasized that the goal of her study was to show that more policies should be devised for helping senior citizens from a social aspect.
Most senior welfare policies centre around strengthening income, such as providing subsidies or basic pension. However, as this study shows, more policy interest should be given to senior citizens' depression rate or social participation rate.
The study was published in the latest edition of Pension Forum, published by the National Pension Research Institute. Park Ji-won, Business Daily.
It seems the health campaigns are working. Korean salt consumption was found to have shrunk by nearly 20% over a 4-year period. And the cost-cutting effect from this trend is set to number in the billions of dollars. Our Eunice Kim has more.
2,000 milligrams per day, or roughly 1 tablespoonful. That's the daily sodium intake recommended by the World Health Organization. It's a threshold that Koreans have far exceeded due to a salt-heavy palate and diet, a habit the government has been trying to curb. And there's progress. According to the Ministry of Food and Drug Safety, Koreans' daily sodium intake has fallen below the 4,000 milligram mark for the first time since records were kept in 1998, cutting 19.5% to 3,890 milligrams per day in 2014. This is being attributed to reduced saltiness in key Korean staples like kimchi, ramen, and gochujang. Daily sodium levels saw the biggest reduction in the fermented cabbage side dish kimchi, more than halving to 407 milligrams in 2013. Ramen, or instant noodles, also fell from 147 to 113 milligrams, while the red pepper paste gochujang saw volume shrink by 28% to 148 milligrams. Also paring down their sodium content, companies producing sauces, snacks, and processed meat products, heeding warnings that a high-sodium diet is the starting point to all types of chronic illnesses, not limited to high blood pressure, stomach cancer, and cardiovascular diseases. In fact, the prevalence of hypertension in Koreans did drop from 29% in 2012 to 25.5% over the 2 years following. And it's progress like this that the country's Food and Drug Administration is hoping to see more of, as it estimates some $9 billion was saved in costs related to death, lost labor, and medical expenses. Eunice Kim, Business Daily.
And that wraps it up for today. But we'll be back tomorrow at the same time, same place for your Business Daily. So don't forget to tune in then. Thanks for watching, and bye-bye for now.